One of our key FX themes for this year has been political risk in Europe. The euro has remained resilient despite heightened political risk ahead of the Dutch and French elections. It prompted us to raise our euro forecasts after the first round of the French elections. We are now even more confident that the euro has bottomed out following the French elections and expect euro-dollar to continue to rise towards the 114 level by year-end. European political risk is likely to go on the back burner now for a while, following the election victory for Emmanuel Macron. That lifted euro-dollar briefly above the 110 level for the first time since the US election, but we don't think that diminished political risks alone will be sufficient to drive the euro stronger from here on a sustained basis. The market had already removed most of the political risk priced into the euro after the first round of the French elections. The next key event for Emmanuel Macron will be the upcoming legislative elections in June, which will ultimately determine how much of his economic reform programme is ultimately legislated for in the coming years. But for the euro, we think the next key political event risk will be the upcoming Italian elections, which we're currently penciling in for the first quarter of next year. The market's focus is now likely to switch more onto the improving economic fundamentals in the Eurozone. The Eurozone economy is now experiencing its strongest phase of growth since the global financial crisis, and deflation risks have also eased considerably, which we believe no longer justifies maintaining the current loose policy approach. We expect the ECB to take another small step towards tighter policy at their next meeting in June. The ECB has already signalled that it is considering adopting a balanced risk assessment for economic growth, and is considering as well tweaking their current forward guidance that rates are likely to remain on hold until well after the end of QE. ECB Chief Economist Prayat recently stated that the timing of the first rate hike is becoming more data dependent. It could still be well after the end of QE or could be delivered shortly after QE. Modifying the forward guidance should make the euro more sensitive to positive economic developments. It would reinforce our view that light is beginning to emerge at the end of the tunnel for the euro.